Footlocker reported on Friday. They crushed it, and they announced a new CEO. So their current CEO, Johnson, is stepping down. They're bringing in a new one named Mary Dillon. She comes from Ulta Beauty. She's here to turn things around. Now, Footlocker is a stock I followed. I have a lot of puts on Footlocker at lower prices, and I will disclose that those lower prices are in the 20s. So Footlocker was estimated to earn 81 cents per share by analysts. They reported $1.10. They crushed it. Here is their actual report. Now, one thing I want you to keep in mind, total sales decreased 9.2% from 2021, but it was an increase of 16.4% from 2019. So remember, in 2021, it was coming back from COVID, everybody was antsy, they were getting back in the shop. So it's not unheard of and not unexpected to see the fact that their sales had decreased from last year. Comparable store sales decreased 10.3% year over year. So that's another aspect here. Now, one thing I like about Footlocker is this. If you look at Footlocker in our software, so I'm going to go pull up Footlocker, FL. And one of the things we love here is we go to our annual reports and you can go pull up the 10K directly from our software. One thing I like is new store sales. So I want to look at closed stores. Look at this, guys. Their closed stores, they are closing a lot of stores. 391 here. From last year, they ended at 2858 stores for January 2022. Now, I believe there's going to be a point here where it's going to talk about year over year. Closed stores. Boom, 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 boom. So I'm just going to keep looking through here for closed stores. Boom, 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 boom. So right here. So the big aspect here I love is they started the year with 2,998. They opened 258 stores and closed 391. It's a net closing of stores, and yet their sales are still going up. That's what I like. They're focusing their brand. Now, there's a lot of rumors out there that Nike has said they're not selling to Foot Locker anymore. Not true. Not true at all. Nike is changing the way in which they're going to sell certain goods to Foot Locker, but it's still going to be a big source of revenue. But Foot Locker's trying to change to being more community-based and bringing more local type of feel to every store. You're going to see individual stores pop up as opposed to malls, but they are contracting their store sizes and still seeing increase in sales, which I love. Now, does this mean Foot Lockers are screaming by? I don't know. But I look at Foot Locker and think to myself, okay, let's go to our software real quick and let's look at the 8 pillars of the software. So first off, 2 big ones. They're selling for 7 times their 5-year average profit and 6.5 times their 5-year average free cash flow. That's pretty awesome. Look at this, buying back a ton of shares. Now remember, I like looking at buyback of shares, but the key here is I want to make sure that companies buy back cheap shares because they're allocating their dollars into an investment world. It's no different than them buying shares of another company. If they're buying their own shares, yes, it is helping us investors out even when it's expensive by decreasing the number of shares, but they're misusing their capital. Here, I like the fact that they're buying back cheap shares. Keep buying them back, guys. What does that do? Well, this is very important. Let's say a company makes $10 a year and they have 10 shares outstanding. That's $1 per share in profit, right? $10 in profit divided by 10 shares. And let's say you assign a 15 PE to the company. You're saying the stock is worth $15 a share. $1 per share, 15 PE, $15 per share. Well, let's say they buy back 2 shares suddenly. Now they have 8 shares outstanding. Now instead of $1 per share in profit, it's $1.25. Assign that same 15 PE, and what do you have here? You have roughly, 15, a quarter of 15, so dollar, 15, 25. So it's almost $20 a share. Call it $19 a share. That's what you're doing here now. You're driving the price of the stock up because you've decreased the number of shares outstanding. You're driving the price up. Let's say they cut their shares in half by buying back half their shares. Now they're generating $2 in profit per share times a 15 multiple. You've now done nothing to the profit of the company, but by buying back the shares, you've driven the stock price from $15 a share to $30 a share. That's how a company that has inexpensive shares can drive the value of their price up. That's going to reward investors who stuck with it. That's what I like about what Foot Locker is doing. Because I like the Foot Locker niche. I like the fact they hired this new CEO to really turn things around and really focus the brand on more specific, unique issues according to a community and take their company shares, company locations down much further. So cash flow's lower, but revenue's up and profit's up. So let's go look at the income statement. So if you see right here, they had growth early part of the decade and then stagnation. And then even during COVID, right here, they still saw growth and a big jump here. Guys, I don't expect that to continue. On our software, we have earnings and revenue estimates coming up in the next couple of weeks. You'll be able to see what analysts are projecting, but this is probably not going to be sustainable for the long run in terms of big jump. This will probably drop from here. As you saw in the report, they still saw a drop in revenue and profit in revenue from last year. Okay, that's fine. Let's look at net income. Again, pretty stable in the mid few hundred million, jumped up a little bit, dropped, then back up. This is probably not sustainable at the $800 million level. That's okay. That's okay. Let's go to the cash flow statement and look at how their cash flow has done in the last few years. Their free cash flow over the last year was actually down. And it's a little inconsistent. So all the more important here, look at long-term averages here. This bad year offsets this really good year. Or two bad years offset this really good year. But before then, they were pretty consistent. So what we're going to do here is we're going to now look at the stock analyzer tool. Now, why am I looking at the stock analyzer tool? Well, if you're new to this channel, I'm Paul. I'm a value investor. My goal is to look at the quantitative aspects to a business and determine if I want to look further to determine if I want to buy the company. But the quantitative, the numbers part drives my decisions. I want to make sure I'm paying a reasonable price for the company, and then I want to pick the best companies from there. I use my stock analyzer tool every single day on dozens of companies in order to determine what price I'm going to pay. Because every investment is the present value of all earnings or cash flow. I use the future's unknown, so I use this to get my future assumptions in, and it'll tell me where I should be looking at for the stock. So for here, I'm gonna go a 10-year analysis for Footlocker. I'm gonna make low, middle, and high assumptions on revenue growth, profit margin, free cash flow margin, and then I'm gonna put in low, middle, and high PE and price of free cash flow at the end of my time period. And I'm looking at 10 years, like I said. So let's start off right here. And remember, if this is confusing for you, please rewind this portion because it's a very, very important portion of the video. And it's very important to understand the stock analyzer tool because it's so valuable to our software to be able to drive people onto what to look at next. So I'm going to go crazy, guys. I'm going to go negative 3% revenue growth, 0 and 3% revenue growth is my high. I'm being very conservative. My goal is to be conservative and sit there and pick companies that are selling at reasonable prices. Profit margin. Now, if you look right here, their 5 and 10 year numbers are pretty close. I'm not even going to look at the huge last year number of 9.2%. I'm just going to ignore that. But the 10 and 5 year numbers are 6% and 6.7. So I'm going to go a little bit lower. I'm going to go 5.5, 6, and 6.5. Free cash flow margin. Again, I'm ignoring last year's fluke and I'm going to focus on these two numbers. So I actually might do the same thing as earnings, as profit margin. Why? Because over long periods of time, PE, earnings, and free cash flow should be very similar. So I'm just going to focus on that. Now, as for PE, the current PE is 4. But it also had a fluke year here. So if it's a dying company, what PE do I want to pay? Let's call it 7, 10, and 13. So 7 for it dying, because every dying company still has value if there's reasonable debt on there. 10 if it's not growing at all, and 13 if it's growing a little bit. Because retail still has its issues. PE, price of free cash flow, I'm going to do the exact same thing. Now for my desired return, guys, this is a riskier company. This is a smaller company. It's in retail. I'm going to put in 15% desired return here. Okay? Now, I'm going to hit the analyze button. It's going to give me 6 numbers. It's going to be a low, middle, and high price based on earnings and a low, middle, and high price based on free cash flow. If it's all green, it does not mean go out there and buy. It means go verify your assumptions. Okay? If it's all red, it doesn't mean ignore it. The stock's currently at $37. If it's saying you need to buy it at 35, guys, you're pretty close. Go do your research now and set your stock at a watch list and add it to your watch list. That way our software can email you, text you, and send it to you in our app when it hits that strike price. So I hit the analyze button, scroll down, boom. Low price of 29, high price of 60, middle price of 41. So to me, go back here, verify these numbers above and make sure they're accurate and add it to your watch list at whatever price you want. I'm going to put it at 30. Notify me, stay on this page. Guys, this is Footlocker. I think there's definite information to go out there and check out, but you can see why I have puts in the low to mid 20s on Footlocker. Thank you very much for your time.